The calm before the storm, possibly the most important time for traders and investors in 2024, is now upon us. And of course, what are markets doing? Well, they're finding key resistance and a major trade level right before the announcement. So what did FundStrat Tom Lee's data say about the upcoming next 2 weeks? Well, as it turns out, he's got a 100% record on the numbers that he's bringing to us. And in today's video, we'll talk about that, along with the dark pool transactions and of course, options flows. Also, the US dollar seems to be front-loading a short. Meanwhile, commodities in other markets are improving. That and more coming up. Let's talk stocks, commodities, and cryptos together right now, guys. See you on the other side. Well, welcome back, everybody, to The Daily Show. My name's Tom, and in today's video, we'll be talking about some massive transactions, and of course, we'll be talking about some data that will blow your mind. Just a quick community announcement. If you're from Melbourne, Australia, or Sydney, make sure to check out our free events in October. They're going to be amazing. It's going to be awesome to meet so many of you out there, and the Melbourne event is starting to fill up, so make sure to check it out. Links in the description down below. Let's jump into the data though, because of course this week is big, and we mean big because central banks around the world are making huge decisions, particularly the Bank of Japan, PBOC, Bank of England, and of course the Federal Reserve on Wednesday. Now this has dramatic implications when it comes to metals, it comes to currencies, and of course stock markets, including also crypto. And we know that markets tend to come in a certain way, but according to Goldman Sachs' latest data, it looks like their indicator is showing neutrality. And that makes sense in some ways when we consider the kangaroo market that we're in. Over the next 1 to 3 months, markets will make a decision. Are we on the recession path or the non-recession path for the market structure? And I encourage you, if it's your first time here to the channel, subscribe, because it is going to be an amazing time trying to work this one out and figure out whether we're going into a deep and dark recession faster than we already do suspect. Let's talk about net new highs, because they're improving. And you can see here that this is a good sign if you look at the next 12 months based on annual history, 9.4% and 68.7% of the time. When we get this type of breadth improvement, it does lead into usually a good period. Median 2-week returns, as we know, this is the worst 2-week period of the year. Take a snapshot of this one because you may want to remember the best 2-week period of the year, which happened again this year, which is July, the first half. And it's a great one to have. We've got it over linked in our X comments in Twitter or whatever we call it now. Let's talk about FundStrat Tom Lee's seasonality though, and why he believes that it's a 100% track record, or at least the data believes that's a 100% track record of having a negative September when we see the first 4 days of the month end up down. And that's of course what we've seen. Now, I'm going to read a couple of charts here. I'm going to read the dates. 31, 33, this is 1900s. 34, 37, 44, 46, 87, 2001, 2008, and 2015. So these are all the years that we've had this. The average return over September has generally been negative 9% from the start to the back. And that basically means that we could be going back into the kangaroo market. And remember, where we find ourselves in the kangaroo market right now is at the resistance, right at the top. And as you'll see, there's some dark pool transactions coming through, which may suggest that people are already positioning potentially to the negative side. But let's not get too negative right now, because we know that when we had a 4-month run up into August, that's never been the top. And we also need to remember that when we see things like we did last week, which was going from a negative 4% the week before to a positive 4%, which we suspected, this all has that implication of showing us that the breadth, the rotation of the street is starting to happen underneath ahead of this US election. And speaking of US elections, we still may not be out of the volatility just yet. Did you know that VIX peaks usually in October? And although this year I don't think it's going to peak, as we saw 65 in August, that would also make sense though, because August is most likely the low. Remember we mentioned kangaroo style market? Well, that is kind of the way this tends to play out. And October is still going to be a volatile event because we know VIX term structure is proving towards that. So what happens here over the next month? Going to be very important. Did you know also that it's very rare that not only do we see tops in August in general, but also that we see almost all the tops of markets in December. 52% of the time, tops appearing in those periods. Days on NASDAQ being down over 1, then closing above 2. We just saw these reads over last week. And we know that when we get this on the NASDAQ and the S&P, it does still have a positive correlation to the next 12 months. And this could be a bit of a hint. We've seen breadth improvement. Remember, the average there was 9.6%, and we've got here 12.2% as the average when we see similar signals as that huge move on the S&P last week. So don't necessarily go, oh, wow, we're going into a recession, everything's dead and everything's gone now. We kind of feel like it's the end of the market cycle. And that means we're in what we call late cycle. It's part of the reason we've been so bullish on gold and utilities this year. And guess what? They've been doing really nicely. Now, the market believes there is a 61% odd of overall 50 basis point cuts. Now, I actually polled you guys and you said that it was 70% chance of a 25 basis point cut. So this is going to be a big time. And we know that as we see this easing, we will find out whether we're also following the recession path, which is huge amounts of cuts that are consistent, or the non-recession path, which often means quite a few cuts, then stabilization or the terminal rate that we end up hitting. Now, the market at the moment seems split between this decision, and it seems like we're going in the middling zone with around 200 basis points of cuts being possible over the next 2 years. And this will be an important factor because we know that markets tend to freak out if the Fed is freaking out. And the 50 basis point cut could suggest that they're not very sure of how good the economy really is. Let's look at the last 4 times we've seen cuts though. 25 basis point cuts are here. 50 basis point cuts are here. In all 4 of the most recent reads that we have, they went down over the first 5 days. The first 10 days in the 25 basis point cuts remained negative as well. So this could fill into Tom Lee's kind of 100% stat there, where if we have 4 days of bad September, we tend to lead into an end up negative for September. And that we probably will see volatility based on history in the past, which will then end up making a big decision, whether that's up or down. Now, I'd be interested to know what your comment is down below. Are you bullish or bearish on the next 3 months in markets, considering we've got 1 month of pretty much volatility left, maybe 2, and then we'll make a big decision on markets whether we're prepared to go super bullish over the next 12 months and continue in the AI bubble. I'd be interested to know your comments, but let us know down below. And we will be following this structure, so make sure to subscribe. Now, I want to grow into gold. We love gold here on the channel this year, but we also know that it's only during certain times you want to hold gold. Have a look at this chart. Barrick Gold annual gold production is the lowest it's been in over 20 years. That's pretty wild. Also, when you think about gold and metals starting to run again, could they be running because oil is getting cheaper? Gold's not cheap to get out of the ground. Copper and silver, often in open pits sometimes in projects, well, they're benefiting from this lower oil. And in fact, it could go into their profit overlays. So you can see here that profit is actually starting to uptick. And in fact, I believe the metal sector may have some of the best cash flow in the markets right now. So maybe Wall Street started to sniff this out and move into it over the last week. We also know, though, that oil is at a probable bottom when it comes to everyone being so negative on it. Whenever we've seen this low number of overall long contracts, we've tended to see spikes in oil over the next coming months. So this is a very interesting point here into the election. And of course, as I've said all year, and I continue to state, oil is particularly very sensitive to the elections because there's a lot at stake this year and people are trying to manipulate it each and every way. Let's go over to dark pool transactions. Speaking of manipulation, let's talk about this one. 2 times leveraged coin fund. Big transaction came in here. Now the biggest on record. And of course, last time we saw a big one, it led into a sell. Could this one be a buy? Very interesting point for crypto. And obviously coin finding some possible buyers there. We've also got a couple of positions starting to appear, and I would expect over the next 24 hours, big positions to start to appear ahead of the FOMC. So stay tuned for that. I'm excited to get that video out to you. I will be doing it earlier. Plus, we'll put some into the newsletter as well. So make sure to sign up for that. Link's in the pinned comment down below. It's going to be a very big event. So we have a big dark pool transaction in a short Q fund and a short S&P fund appearing right at this most traded level. I would say someone's trying to go short. That doesn't mean it's a solicitation to go do it. But just to give you an example, when we started to see stacking on this point for Google the other day, guess what? That was the low for Google, and it's since started recovering. So sometimes these big transactions can tell us a little bit about what the biggest traders are doing, and they can help us make better informed decisions along with our price action. Remember, price action is ultimately one of the key reads that we must have. Last 24 hours, we saw energy, we saw financials, we saw defensive start to come through. We obviously know the last 5 days has been driven by metals, mining, gold, and these kind of upticks. And we've started to see this appear, of course, in the charts earlier. When it comes to advanced decline line, that continues up, which shows us breadth is improving in the 500 stocks. But of course, it's being led by small ones. So that means the market can't go up as much. But we're basically trading right around the most traded zone, with delta being neutralized over the 2 days leading in. When we look at the futures market, we know the two key levels we're watching. If we do end up getting a sell, could come down to the 55.15. Remember this level in a moment. And of course, if we get a buy and we go through 56.40, which we know is key, then we could be pushing into the 56.80 line. And that makes a bit of sense when we look at the options. So I think this is options related. Let's have a look here at 56.40, positive gamma event. Both the Tuesday and the Wednesday are filled with 56.40, 56.30 calls. This is a huge deal. 56.55 obviously starting to become a big put level, and that's something we'll be watching. But if we do manage to take 56.40, markets are in the positivity stage at the moment. So although we know we're at a key potential bearish zone, we got to remember the trend is still up and the gamma is still positive, especially through those areas. Now, remember I said, 55.15. Well, that's because if we look at the end of the week, the options flow seems to be very strong around 5,500, 55.20 for puts. So they will be key levels. CTAs, no surprises. We know they're all buying across the board at the moment. Oil, silver, NASDAQ, S&P, they were behind. Now they've started to buy back in, and momentum funds are starting to get back into these flows. When it comes to Tesla, we know there's only one level, 230, 230 into 250, 250 into 280. These are the key kind of flow zones at the moment, but we're looking for a 230 plus close, ideally 232 plus close to get that started. So Tesla's at res at this stage. NVDA gets a little bit more interesting, 110 being the key put, 120 being the key call resistance, and surprisingly 113 here you can see starting to get a lot of trade on it. So we're in positive gamma on NVIDIA, one to watch. Let's move over now to the general broad markets. We'll kind of start here with the US dollar yen. This is going to be one that I bring up in the next video because, of course, people are starting to freak out about it. It's become that possible, new low. My goodness, we need to see volatility all over the place. We will go through the big trade transactions because people went from one extreme to the other extreme on this. We'll report on that over the next 24 hours. Another one that people have asked about is treasuries. What do we think about treasuries? And we'll add treasuries into the chart here, and you'll see that they're breaking to the upside. Now, this is kind of pointing towards 108, but as I've often said, I don't think treasuries are a trade. They're more of an investment or multi-month decision, and there is a lot of volume in these. I think treasuries will have an incredible volatile day over the next 12 months because everyone's levered them super long. And that always has me wondering. I don't think it's a great time to be super levered in treasuries. That's just my opinion. We'll see how it plays out. Volatility of the volatility is showing we're still elevated, so obviously we have to expect volatility to potentially spike into Wednesday. And we know the US dollar has weakened ahead of the event, suggesting that we could be open to a 99.5 and under parity shoot by the dollar. At the moment, the dollar is really weak. We've known that for quite a few days. We've been talking about it for a while now. And it'll be an interesting one to see how it plays. But at the moment, the dollar is weak. And that dollar weakness is also leading into copper breaking out. Congrats, anyone that's been in this. Of course, this is an absolute day trading masterclass special. This is a very replicable trade, guys. Multiple trades actually here in copper. And we're looking towards this possibly actually getting towards a 460 or 450 read. So it looks like metals are back in a little bit of a way, and that's being reflected in the Chinese market as well. US oil picking up, daily 20 sits around 71.50, mean reversion sits around 75.60. That's probably what most people are gunning for when it comes for the bulls. They're going to be looking towards this level, and we'll continue to watch and see whether oil keeps recovering. But as we suspected last week, we saw the signs of recovery, and so far so good in terms of oil making this little bit of an upshoot. There probably is a reaction trade off that, which we'll update soon. What about gold? Big swing through the massive coil. Congrats, gold buyers. You're probably feeling pretty good. 2600 is soft psychological res, and the technical res is about 2628. So it still looks pretty good. And even if it pulls back to like 2510, probably still buyers around there. Silver improving as well. Key first take profit 3120. Second TP 3460. So yeah, very nice on silver. Basically an inverse head and shoulders here. Great move. And yeah, for now, it's doing quite well. Check out silver gold ratio in our previous video as well. We went through that quite interesting stuff. Tesla, 232 plus breakout close, and then we start to move towards 250 and then possibly even 280. You've got to remember this is an inverse head and shoulders pattern, and if it does break out, could be quite an aggressive positive gamma move. NVIDIA is a bit tough. We know 110, we know 120, and we also know that semiconductors are probably giving us the better chart right now. The gap fill res seems to be about 242. They recovered after selling through the session. This did a bit better than NVIDIA. We'll see whether it can actually start to improve. HSI, as we mentioned before, China has been recovering. This is fully replicable style position as well. Congrats to people that have been in this, particularly this little 17.2 level was a very nice pickup through the beginning of the session. And that's really rebounding on further stim hopes and obviously the potential of as well as metals improving across the board. They're quite linked. We'll keep watching this market, but this is really just also a bit of a kind of history lesson in how recessions often bottom off. Remember, the actual news sentiment is horrible for this. So you're following price action more than you're following sentiment. Sentiment is just disgusting in everything that you read about China right now. Let's move over to Oz 200 when it comes to the market breaking up. Well, this is a good market if we can get energy through and we can get metals improving. This is basically financials, metals, and mining stuff. So yeah, new all-time highs, and we expect the Aussie market to continue to potentially push higher. US 2000, stuck in the middle of the zone. I'd like to see 2220 sink over the next 24 hours after retail sales. Maybe that really heavy spend on credit cards in the back to school kind of season is going to push that level. And obviously where the buyers are is probably around 2100 realistically, or this most traded zone. Qs are at res. My favorite kind of projection here would be to see something like this occur through September into October. That'd be pretty sweet. We are at resistance. This is a very key trend line. We're at the gap fill. We're at the most traded zone. I don't blame a bear trying to attempt here, but you've got to be careful. Extreme volatility could be just around the corner, so we have to expect that. And when it comes to Bitcoin, we're back at that kind of where we should see buyers come back in, 57.3 to 56.5. I'd like to see this block find a bid. We do know we're in an overall downward trend at the moment. On the higher time frames, obviously October is seasonally strong for Bitcoin, and it's a very, very interesting time for crypto. It's been struggling all year. So is it finally time to turn the corner and start to catch up to gold? Maybe it is. With the news ahead, we're only really looking at two things at the moment. Retail sales. Yes, there's CAD, CPI as well, which may tell us something. Who knows if it moves the market. And then the FOMC statement. Remember, the press conference is what matters, and that's 2:30 p.m. So that'll tell us a little bit about future guidance as well, potentially. Jerome Powell loves to use all the tools in his garage. All right, guys, it's a big couple of days. Make sure to subscribe to the channel. Make sure to check out our newsletter as well. New one coming out after the close tomorrow, so sign up for that. And again, a reminder for anyone in Melbourne and Sydney that wants to come out, say hello to us. We're giving a great seminar, some excellent tips in there as well. Make sure to sign up. Links in the description down below. Melbourne event is starting to fill up. Sydney event, there's a tab underneath for you to sign up your interest on that. And I would love to see you there. It's been a fantastic time. Let's continue at it. The next 3 months, super important to markets. Bye for now.